Treasury Secretary Scott Bessent saying it's, quote, up to China to de-escalate the trade battle. As progress on the trade war between the U.S. and China remains to be seen, we're looking at the implications for China's future role in supply chains. Rhodium Group senior analyst Lauren D. Piper is joining us now to discuss. Lauren, thanks for being here. Obviously, we don't know how this is all going to play out. But in the meantime, companies are trying to move things around to try to change their reliance on supply chains, to try to change what their supply chains look like. How quickly is this adaptation taking place?
Thank you so much for having me. I think you're exactly right. Companies are desperately trying to shift their supply chains. But how quickly this happens really depends on the sector. China is by far the world's dominant producer across sectors like even apparel to solar panels to electronics and automotives. And for a lot of sectors and a lot of companies, right now there's just not enough manufacturing capacity outside of China to quickly shift production. And this is why, as you guys were talking about earlier, we're seeing some slowdown in container shipping coming to the US soon. It's possible that in the long run, some of these supply chains could change, but it's going to depend on where these tariffs ultimately fall.
Lorna, I'm curious, what do you think the odds are ultimately of a grand bargain being reached between Trump and Xi? And what do you think such a grand bargain could actually look like?
I think some sort of grand bargain is possible. Right now, 145% tariffs on China for most sectors is just, it's a trade embargo. It's not sustainable. So I think most likely what we're going to see is that the tariff rates are going to come down, but they're most likely going to remain elevated. And so the most important thing to watch and what's going to matter for global supply chains is the difference between tariffs imposed on China versus other countries like Vietnam or India. If there's not much of a difference, we may not see supply chains shift that much. But if tariffs on China remain elevated compared to these other countries, it will create enough of an incentive for companies to move their supply chains out of China.
Lauren, we've been focused on the semiconductor supply chains in particular, but also the sort of export bans that we've seen from the U.S. imposed on the ability of companies like NVIDIA to sell into China. We then got a report today, of course, that Huawei was going to be developing some chips that would compete with the chips that had been banned for sale in China. So as we watch that develop in the sort of homegrown technology industry in China, does it end up giving that industry a boost or does it end up holding it back?
These tariffs and the trade policy the Trump administration is pushing forward, it could incentivize China to double down on its self-sufficiency goals, as seen with Huawei and its development of its homegrown chips. I think these tariffs the U.S. has imposed has really made clear to China that the U.S. is committed to doing more restrictive trade measures and that the trade relationship is going to worsen. So I think that China will double down on developing these homegrown technologies on the sort of self-sufficiency push that we've seen China work on for the past decade or so.
Lauren, what is your sense of sort of the health and resilience of the overall Chinese economy right now? You know, Barron's had a good piece about this, pointing out it was of course sputtering and then seemed to be just kind of finding its footing. And now we have, of course, new tariff and trade tensions. But I'm interested in your take.
Absolutely. As I'm sure you know, China's economy is heavily reliant on exports. And so these tariffs pose a pretty significant risk. And that's why a lot of Chinese companies are already reporting up that they're pretty concerned about their prospects. Ultimately, the impact that this has on China's economy is going to depend on where the tariff rates fall and how long they stay up for. And it's something that we'll be watching.
What sector or sectors are you watching most closely, Lauren, as this is all playing out?
A handful of sectors. First and foremost is some of the consumer goods sectors where 145% tariff just is not sustainable for a U.S. consumer. So, for example, in apparel, even though it's a sector that's, you think of as one that relies on low-cost labor, China is still a major producer of apparel products. And now with the tariffs going on, we see some major apparel producers like Shein announcing price increases of up to 377%. And so looking at sectors like this is going to be really interesting to see just how long U.S. consumers are willing to take these higher prices and how that affects the Trump administration's willingness to maintain such high tariffs.
Lauren, great to have you on the show today. Thanks so much for your time.
Thank you.